Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club. Welcome to the weekly Forex forecast for the week starting of 24 until the 29th of March 2019. Before we start, few messages. If you are new to the channel, welcome, and I hope you enjoy my work. I invite you to subscribe to the channel and to join us in the free Telegram channel for trading ideas, education, videos, articles, and much more. To do so, just follow the link in the description below the video. On Monday, I will publish the weekly forecast PDF format. So a summary to this video. Just come back on Monday to the video, and below in the description you would find the short link to the PDF. Let's begin. Previous week was a very interesting week. Personally, for me, it wasn't the best because my swing trades still didn't really change much since the previous weeks. So for me, it was just a boring week. But it was a very active week for short-term traders and those who are looking for intraday opportunities or very short-term opportunities. This week also should be also very interesting, as we have a lot of fundamental events with the main focus on this weekend, the news from USA, Mueller's report, and of course Brexit vote coming this week. So that's where we have to focus and see how that affects the markets. So what we will do, we go over the previous week forecast. Now it's a review of what worked for us, what failed, what should be updated, and what are the new opportunities we trade. The pound dollar, we are bullish for the longer term, and this one didn't really change. This is my personal view here. As long as we hold this bullish momentum, I'm looking for a bullish structure. Didn't really change much this week. It dropped during the week, during the beginning of the week, then retraced all the way up and pretty much returned to the same place where the week started. So not much. It was a pretty serious volatility during the week, but not much change for the longer term. My personal view remains bullish. However, we do have to pay attention what happens with the Brexit thing this week, how the vote goes. It could change the whole picture. So as for now, as long as I'm above this trend line, I'm looking to maintain my buys. Break above that, or maybe even creating lower lows, would be a real sign to be careful. And of course, for the longer term, that's my personal expectations of years, again, unless there will be any critical change from Brexit votes and news. Next one, Euro Pound. We were looking to trade sells in the longer run, possible corrections on the short run, and two waves or a range. Basically, this is exactly what happened this week. We saw this making two waves, and also inside this range. Right? So both scenarios were good for the short term, and of course for the longer term, go and attack the sell. This was a critical level to watch right here with this top, and once the pair has reached this area right here, we can see the turnaround. So the main question, what's from here? And I want to remind you that according to the longer term view, the direction is bearish, as we are trading here a triple cycle, and this is a double cycle correction. However, yet on the short term, this pair might go and make any kind of long-term zigzag here, and things could change within a moment. So pay attention to that. For me, the plan was and remains rallies are to be sold. That was my main plan for the long term, and it remains so. CAD franc, the idea was after buys from bottom of the channel, or if it holds this supportive area, or in simple words, two ways from the daily chart, and then the buys. So here's the second one. It didn't manage to hold this support area at the beginning of the week, right? It was trying to, but then retraced all the way through. Well, personally, I had to accept a loss here. As we break, we go invalidate this area, game over. So I'm looking for new opportunities to enter as for myself. As for now, there is nothing really new happening. We are still at this two waves structure that might turn to be a divergence, or it might turn to be a bullish hidden divergence. For that to happen, daily must stop and the 4-hour chart has to build up its divergence here, ideally with the moving average. We do need to pay attention to these levels. So first of all, we have the 261.8 of this cycle, and then we have the wrong Fibonacci. Then after this range, basically that's the levels we have. So we have two pretty much critical levels. That's the first one. Also pay attention to the clearance zone here. A lot of stop losses would be located here, so we might get this, okay? Or going slightly lower to the area of 0.73, slightly lower than that, and we are after the bullish attacks. So I personally am after buys. As I said before, I had to accept a loss here for myself with this turnaround. The idea was for continuation. Once the level doesn't hold, there is no reason to fight, and getting out is the smartest thing to do in such occasions. Many traders, what they do is they find million reasons why to hold the positions, but there is a support, there is a pivot, there is a Fibonacci, there is support, anything. But it's not smart. We never can predict how serious the market can go against us. We never know if our plan will actually go and work. So the ability to adjust and to change your opinion, to cut early, is the critical thing to do when you trade and you discover things go against you. If you cut earlier, you would have better chance later on, and it's in a game of statistics, which trading is a business of statistics numbers. The most important thing is reduce the losses as they happen, improve the profits as they grow. I know it sounds beautiful in such sayings, especially when it's presented in a video. The reality is way more challenging. However, it's the main secret of successful trading. You know, the market is able to pay as the market is able to pay. What we gain and what we lose from that, it's in our hands. And that's why I wanted to show this cut front, a very important thing, as you remember. Right? That's why I showed you this review. One of the things was to hold this support. That was one of the plans. Doesn't work, get out. Waiting for the next development as a two waves at the bottom of the channel, which currently doesn't even hold because we go through, and two waves to form and complete on a daily chart. That would be the next plan for the next buys. Okay, very, very important. Next one on our list is the Australian dollar. So we got a trendline breakout. But look what happens now. It is retesting it, and it is making a bearish hidden divergence. So instead of gaining the momentum after a breakout, the pair retraces back. There is a lot of things going on right now with general economical conditions. The US-China agreement, the Mueller's report we published. Of course, the latest, previous week, Federal Reserve report that they, from a plan of having 2 hikes in 2019, they moved to 1 more hike in 2020. That's huge change for a monetary policy, and all that definitely has an impact on the dollar itself versus all the pairs. and also the Australian dollar get hit. So far the plan remains still bullish, and we do have a structure here of 3 highs, 3 lows going up. So this is invalidation area, and we should be looking for possible buys. However, and it's very, very, very important to pay attention to it, if this is going to be one straight leg through all the Fibonacci's levels, this is a warning sign that maybe the market is not ready yet for a serious rally. And in that case, we would have to adjust. It's very early to know yes or no yet. As you can see, we discussed about that. We broke the trend line. We are now slightly below the retesting area, trying to maybe make a false break. Again, all would be critical to see how the week begins. And if it doesn't hold here, we are going for one more low with this divergence to form. And then for long term, the plan still remains after buys. So that's for the Aussie dollar. We have to keep an eye here as it starts to show some possibly short-term signs against us. Long-term doesn't change as we have our special cycle from the monthly and a bullish divergence. It's a question of timing. Euro-Aussie, our plan was sells. So Euro-Aussie pretty much still in the same direction. Unchanged, and my view remains the same here exactly. I'm after bearish sells here. Even if it pushes slightly higher, I'm only looking after sell setups. And the reason for that is the main cycle I am trading here. Okay, so I expect 2 waves or some ranging conditions. For me, it's only sell the rallies if they happen. Next one. Euro versus the dollar. Now this pair is very, 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 very interesting, but before that I would like to ask 2 seconds of your time, and if you are new to the channel, please subscribe and leave your comment below. Hit the like button. Your help and your support is a big help to me and my team to keep providing this content for our community. You can share this video with your friends, and of course, as always, thank you very much in advance for your help. So the next one on the list is the euro versus the dollar. Now here is the thing. One of the scenarios I wanted to see before start looking for the buys was for the euro to break this high, retrace, and look for buys after these higher highs and convergence scenario. If it wasn't to break, the idea was to look for sells. Now that was the 4-hour chart plan. Let me show you here. Here. The plan was to see this trend line, right, hold here and provides us a bearish reversal. So this trend line was holding for a couple of days, but we never managed to see anything bearish reversing here. No lower lows, no structure of lower highs, lower lows, nothing really happened. So the market was holding here for this time before the news, and then boom. Then on Friday, this boom was basically vanished. The biggest question, because of the very bad news from Europe, from Germany mainly, and from the Eurozone and the general picture. So the biggest question, what's now? After convergences, the best setups always coming as corrective cycle. So 2 waves down and then buys or a range. So we got this convergence from the daily chart, but the problem is we are shooting in one straight movement since then as a correction. That's a bad sign normally. So basically the thing here which we need to pay attention to is this area, the area of 112.50 up to 113. Critical. critical zone. If we manage to hold this zone and we start to recreate the higher highs, higher lows, there is a good chance the euro dollar is going to continue up again after the daily convergence. If we break through this level down, then very likely we are going to retest the weekly cycle, which, if you remember a couple of weeks ago when I was talking about the possibility of bearish continuation, this is the level we were talking about. There is also one more critical level from here. Okay, so if this convergence does not hold and the euro remains bearish after the bad numbers it gained on Friday, we should be seeing the euro dollar pushing to 110 or maybe even to full duplication of 105. So we must be careful and pay attention to this area, 112.50, 113. Break below that, we might say game over for the buyers. If it does hold, we might be seeing a good bounce and a two waves correction here. Two waves, or at least a movement in a range, right? Something like that. So eyes on the euro dollar, it's in critical place, and to say clearly where we are heading for now, it's basically impossible. There are too many mixed signs. Pound versus the yen, the zone I was looking to trade short from is 149 and 150. If it's holding, so far we have a good hold here. The area is holding here, the 149, 150, and we got a beautiful bounce, about 400 points since, and personally I think we still might see that pushing lower, so rallies could provide us sell opportunities. We might see that, or slightly lower. Our invalidation area would be the previous top. The idea remains still bearish for me. New Zealandian yen, I was looking to trade from higher levels for a sell, but this one never reached the higher levels I wanted to see. So as for now, I simply ignore it because yes, there is divergence, no, there is no cycle. I don't love to see such combinations for that. Would prefer to be more careful here. Euro versus the New Zealandian. Our plan is bullish. We are looking for buy setups. One of the where we go. Here, as I stated previous week, we should be looking for setups to form. We have the 61.8 critical zone. We have our magnet area right here, right? So we have this and this. We do want to see buy setups forming there. To do so, what we require to see is first of all false breakout, then higher highs, and then retraces, and for buys. Okay, so that's for the Euro Kiwi. As I said the previous week, it's not necessarily going to be traded on the coming week or two. It's a follow-up for us, and that's what we are looking for. And this is the idea: higher highs, then buy retraces. As for now, we don't have higher highs, so we simply ignore. Kiwi CAD, I was and remain bullish until we get the next sell setup, and it's coming very, very soon. I want to pay our attention to a possible level to reach. This is the area of 0.94. Not quite sure if we will reach so high, but definitely this becomes a critical area for us before the next sells. This remains the invalidation, and meanwhile my plan was and remains to see that pushing slightly higher. We do have a critical resistance zone right here, so if we false break it, we might see the bears, but as for now, the bulls are in their control. And I want to remind you that the weekly chart is building up these two waves. Once this becomes the divergence, that's where we are going for a long-term sales setups again. So eyes on that. For all those of you who are running into the buy direction, very good. It looks pretty much okay. Next one, before we move to commodities, dollar yen. I'm bearish for the long term. Looks like things starting again. We have this double or triple cycle. Depends how we put it attention to. So that's where I think we are heading. 109 area or 108 area. So from my point of view, we are bearish or sell the rallies to any of these targets. Once we would get the signs against us, bullish divergences, bullish false breakouts, that would be the cash out place. Until then, dollar yen really is interesting on the shorter view. Let me just make sure I didn't forget anything. No, covered. Yes, these are all covered. Let's go to commodities, gold and silver. The idea was short term, possible sell the rallies. Longer term, we do want to see buys for the long term. So my personal view remains we are still inside this corrective area, and this is still the short term, which after would be looking for buys. Short term, looking for sell the rallies. Long term, buys. Same with silver. We might be doing this and then massive buys, or of course play inside the range for a while before the next portion for buys. Short term, sell the rallies if we get good setups, if you find your good bearish evidences for that. Longer run is once we get the drops, look for buys. That's my personal view here for both. Okay, still remains the same view. And oil, our zone was critical around 60. We wanted to see false breakout on the chart here, right? False breakout and lower lows. And that's pretty much what we got here. This is exactly what we wanted and what's happening. So theoretically, as long as we are holding here, oil is under a bearish correction and bearish momentum. And dollar index, bearish. We wanted to see a break and a retrace. Both happening pretty much the same way until now. Where is my index? Here. Okay, so we got a trendline breakout, right? We got a lower lows, move. So the biggest question is what's next, as the main view still didn't change. We still do not have lower highs and lower low structure. We don't have that yet. So as long as the top holds, we definitely could see the dollar index doing that. If it doesn't hold this top and we break through, there is a great chance, let me show you according to the weekly, that we will be heading towards 61.8, like a mirror to the euro dollar. So if we break through this high which we got here, right, we are going to 61.8 before the next future sells will take place. So careful with the dollar index. It looks promising, but the fact it did not yet create 3 lower highs, 3 lower lows, the same bearish structure I always talk about, the main trend definition, right? Lower highs, lower lows. As long as it didn't happen, we cannot say we have a bearish trend. So the approach has to be more careful. And of course the DAX, we were looking for these critical levels and to look for lower lows. And we have that. We have both critical level in play. and we have our lower lows. So personally, I think the DAX is heading lower. Sell the rallies was and remains the plan. And that's all. This is what we have for the beginning of the week. NASDAQ, pay attention to such a massive engulfing with a beautiful bearish divergence that we see here. I believe this is a safe from the market, and we should be heading lower from here or attempt to make a new high. Look for bearish setups with bearish evidences. It looks simply wonderful. We can go over all of them. S&P, also amazing engulfing pattern with a massive bearish divergence, but also a false breakout. So from my point of view, direction here is bearish. Same with Dow Jones, which is still holding this top, kind of a double top, bearish divergence. It looks bearish. Of course, do not go and overexpose yourself to all the indices. That doesn't make any sense. Choose the one that gave you the best risk reward. Go with that. So that's pretty much it. Thank you very much for watching. A very, very critical fundamental week here. Be careful with choosing your trades. And remember, nothing happens if you do not trade when you don't find good setups. The very natural feeling of traders is, oh, I have to trade, I have to trade, I have to trade, I have to. We always think that someone else is in the trade. We're always afraid of missing opportunities. Ask yourself this question. What are you afraid more of? Missing opportunities or of a not necessarily big loss to be caused? I hope the answer is number 2. And that's why, remember, nothing happens if you don't trade when you don't have good, clear, clean setups. And nothing happens if you don't trade a day or a week. If there is nothing clear and clean for you to trade and to take, don't. Okay? Remember that. The performance is improving and getting better when you know not just to make more profits, but mainly when you know to make less losses. I want you to remember that. When you really understand that, it changes the way you think, and you will be surprised how well it affects your performance. Okay, so that's all for now. I would like to invite you to the live trading rooms we have on daily basis. If you are not yet with us, to join me in my live trading room, just follow the link below in the description to Traders Academy Club. I hope to see you with us. I wish you a wonderful week, and I'll see you in the next weekend. Thank you very much for your time. I'm Vladimir Ribakov, Traders Academy Club.